Shut up and sit down.
All right, welcome back everybody to Rebel Trading Group Podcast. Today's date is June 7th, 2018. Today is Thursday. I am Nathan Oliphant as always, and with me is the gluten-free Jason Bessing.
Jason Bessing, what is going on, bro?
Hey, man.
How was your trading day?
It was excellent. It's been excellent for the past few days.
Good day, huh? We've had some very strong movements this week. It's been a very, very good week. Oh, shit, where'd it go? There it is. There's the numbers. Yeah, it was a very strong week, both yesterday and today. Dow up 102 points. It was a little bit of a mixed day. It was kind of weird. NASDAQ down 50 and S&P down literally like 1% or 1 point. So a little weird day, a little sideways day. But believe it or not, the Dow was led by McDonald's. Not sure why, but I just thought that was random as fuck.
Why did it move?
I'm going to get you that information here while you're giving us the market news with Nathan Oliphant. But
right.
Real quick, I need to give you the coin. 7,680. Really fucking sideways, man. I don't know if you've been watching it.
Yeah, so
Past like maybe 24 hours or so.
I put it in every day, every night.
Yeah, just no movement. It's weird, but. Nathan, I have started trading cryptos. I have finally began actively trading the cryptos. Late to the game, of course. But I like the 24-hour around-the-clock trading, and I like the fact that there's no SEC regulations on my account being under 25,000. So I can day trade this thing. So I'm giving it a whirl.
So you're just averaging into it?
Averaging in, catching swings. I'm watching the 1 minute chart, the 5 minute charts, and if it's overnight or something, I'll check the 6 hour chart. But not a lot of volatility lately, so I'll keep you tuned. The gluten-free Jason Bessing with some gluten-free.
Are you only using US dollar to cryptocurrency, or are you using Bitcoin exchanges as well, like the Bitcoin exchange rate?
No, I'm not doing any of that because I really don't completely understand it.
Okay, so this is what I think. This is what I prefer to do. Is I like to buy my other cryptos with Bitcoin, because I kind of do believe in Bitcoin, I guess, and hopefully if it does go big, like the Bitcoin to, let's say, Ethereum will gain my Bitcoin amount, and I'll have more Bitcoin gaining value
because they go up together.
Or yeah, I mean, what you want to happen is Bitcoin to drop and Ethereum to go up if you're doing that exchange.
It's easier to think in terms of US dollar to the asset, to the big US dollar. So I feel like that's why I like
you're doing the same thing. It's increasing like the amount of like currency. You're increasing the amount of US dollar. But on the other hand, you're increasing in the Bitcoin exchange, you're increasing the amount of Bitcoin.
So what if you had the opportunity to buy the DIA with the SPY? That's what I'm thinking here.
No, I mean those are like index. That's so like totally different.
But like you're using one of them to get another one.
I mean, I guess if you use like numbers, I guess.
I don't know.
There's still a ratio, and that's how it's like traded on the exchange rate.
I don't think I'm getting the concept of the advantage to doing that. I think it's better to go
more Bitcoin.
Cash to asset to back to cash.
Well, you want, like, in the long run, you want Ethereum to go up, or I guess in the short run, but it's gaining Bitcoin for the long run.
But don't they act together usually? They're very sometimes. Like cryptos usually go up. I mean, they won't go up the same percentage. I've seen Ethereum go up like 13% while Bitcoin moves up like 6%.
Yeah.
So I don't know if does it work for you?
It's worked, yeah.
It works. So
I mean, I've caught it on lows.
I might dabble in it. I am still in the very baby steps of really getting into this. I'm basically just trying out one of my strategies that has been working for me on equities, but I'm applying it for the round-the-clockness. So, yeah, we'll keep you posted. I'll let you know. as I get more into it and more actively involved in the crypto space, I'm sure I might be able to grasp that concept a little bit better. Practice makes perfect.
All right, market news with Nate. Okay, so today or yesterday, we got slapped with tariffs from Mexico on steel, and I know another one was bourbon. How is that stock doing? What bourbon stock? What's a bourbon stock?
STZ could be one.
Yeah.
Let's go ahead and pull up STZ. She's a big boy.
Stellar. Constellation Brands. Down today.
Yeah, down there a little bit. That's awesome.
Maybe it's because of the tariffs.
Check out Diageo. DIA? No, not DIA.
DIA. Silly goose.
Silly goose. What's the symbol on that?
How do you spell it?
DEO.
Deodorant.
Yeah, she down 1%. So nothing major really. I mean, how much bourbon's being sold in Mexico? Do they sit there and talk about how much they want to go back to Mexico so they can sit by the beach and drink bourbon?
Yes.
Oh, wow.
They do.
Oh, wow. No.
All right. So there's that. So we're getting
trade
war. It's happening.
Do you think it's happening? So what's going on with that? Like, is it China?
I
or is
subtly
it
heard
the NAFTA fucks?
I don't know about NAFTA fucks, man. I heard Canada's response to our tariffs onto Canada. He said, "We spilled blood with you. How could you do this to us?" I think it's just kind of weird. I don't know.
He's such a pussy. Justin Trudeau is a pussy, and I hope he's listening right now.
So, I mean, there's tariffs.
Are you taking a Zephyr Hills? Are you taking a CJ Couch Talk Zephyr Hills water break right now?
Is that what's happening? No, it's actually a foam cup with water and a straw.
Oh, I heard some guzzling. Sounded water bottle-esque.
No plastic in this house. Literally none.
Good.
You have to get out if you come in with plastic.
Good. I like that. Save the work.
Other than that, let's see if we got any other news.
There was a tech sell-off today. That's what kind of held, especially the NASDAQ, but of course the NASDAQ and S&P. Did you know that, okay, real quick, did you know that the S&P is weighted differently than the Dow? The Dow is equally weighted, but the S&P is market cap weighted?
Yeah, it did. It's price weighted in the Dow Jones.
Mm-hmm.
So every dollar gains gains a dollar in the S&P, right?
Well, correct. But what that means is the S&P fund actually holds a lot more Apple than it does whatever's at the bottom. It's not even. I think like 2% of the S&P, like 2.5% is Apple alone. It doesn't really equate equally across 500 stocks, but the Dow it does. So I think that's one of the reasons that the Dow finished up today.
Hey, here's something.
That index does not.
Check Tesla's ticker symbol, would you?
Oh yeah, have you seen that? That's another one.
Yeah, fatal Tesla. Let me talk, you motherfucker.
Sorry.
Fatal Tesla autopilot crash. Driver had hands-off wheel. Headlines. News with Nate.
Did you see what she did yesterday?
What'd she do? I haven't looked at her.
Yesterday she had a 9% pop.
Oh my god.
She's only down 1% today on that news.
Kill someone.
So really, death is profitable, I guess. But yeah, yesterday alone had a 9% move. So up for the week, 10.5%. Her 1 year, she's still down 11% for the year.
I don't get it. He doesn't make money.
I would touch this. I don't touch it, dude.
I feel like it's like Tulip Fest, man.
Elon Musk. Dude, that earnings call was great. Like, day traders, I'm not in the business of appeasing to day traders, so, sell our stock and get out. Leave us alone.
It's disgusting. I hate Elon Musk.
Anyway, anything else going on? I did see that there was a massive data breach with Facebook, but I think it was just elaboration on the data breach that already happened, and they released like 14 million private posts actually went public.
Oh no.
Oh no.
Not your private post.
Who does a private post? Like, what's the fucking point of posting only allow family?
I wonder if it's like it means like their messages or something.
I don't fucking know, man. People are stupid. Social media does stupid things to even stupider people.
Are you on Facebook?
I'm on Facebook. 2
of our friends have dropped off Facebook within a year.
They've claimed.
So why do you? I hate when people tell me too.
Are you talking about the one that also just did it?
Yeah.
He's already back.
What?
Dude, he laughed and liked at my stuff that like literally on Sunday. He's back. He lied.
Come on, man. Tighten your butt. Other than that, I think that's it for market news with Nate.
Anyway. Okay, awesome.
Why doesn't Tesla pay a dividend? What the fuck?
Dude, they don't make money. How are you gonna
yeah, that's right. Duh.
Come on, have another drink, Nate.
Gulp.
So, I wanted to... I mean, I didn't really even approach you with it. I guess I'm doing it now. I wanted to start a new segment on the show because a lot of people tell me that they struggle with the vocab and the terminology that's in stocks and stock trading. So I'd like to start like a quick little vocab section, a segment within the podcast maybe, and maybe see if that kind of helps and teaches, and it'll also give us a refresher as we talk it out and explain things. So okay. I think it could be a useful thing. So today I got, what is an option contract?
Oh, what do you want and how do you want to do this?
Basically, we don't want to get too into it because this is a very Jesus Christ Jurassic Park thing.
What are you
basically what I want to do is explain what it is. I don't want to go into the premiums and the options trading, but basically let's define to the other people so when they read about options or options contracts, they can at least understand what they are.
Okay, this is what options are. It's a contract between two people on a predetermined price at a predetermined date. That date is known as your expiration date. These contracts give you the option, but not the right.
No, the right.
No, you have the option, not the right.
Or not the obligation.
Right, not the obligation. That's what it is, yeah. You have the right, not the obligation, to either buy, which are called calls, or sell, which are called puts, that stock. And each contract comes in a batch of 100 shares. So let's say I wanted to buy Ford stock, for example. Ford's a good, I love using Ford.
Dude, I love her. Long F, baby. Long F.
It's just like using the number. Because you can say Ford's around $10, and sometimes it is around $10.
Mm-hmm.
So it's just, say you want Ford, you want to pay for Ford today. No, that's not how that works.
No.
You want to pay for a higher price or a certain price. Let's say maybe $11. Let's say at the end of the year for Ford. And let's say right now it's maybe at $10.50. All right. Now you're thinking that the price of Ford is going to either hit, or what you want is to go past 11, because you want to be able to buy it at a lower price while the price of the stock continues to go up.
Mm-hmm.
Right?
Exactly. So if the strike price, which is the price you want, is 11, you are paying a small amount of money called a premium in order to have the right to buy the stock at 11. So for instance, let's say Nathan owns 100 shares of Ford. And I am saying, hey, if Ford goes to $11, I want to buy it at 10. And he says, okay, but I'm going to charge you $50 to do that. So I say, okay.
No matter what.
So we enter a contract that says that no matter what price Ford hits in 1 year from today, I get to buy it at $10. If it's at $15, I get to buy it at 10. Now, if it goes down to $9, Nathan will collect my premium and hold on to his 100 shares. So basically, simply put, an options contract is nothing more than the right to buy or sell a stock at a certain price in the future. That's all it is. And the value of those contracts fluctuate with market prices, but that's a whole nother beast, how the premiums and all that works. But if you know how to use options, it can be extremely fucking lucrative. Yeah. Notice I said extremely. Extremely fucking lucrative, not just fucking lucrative. So, options contract, if you need a better understanding of it, or you still don't understand something, you're more than welcome to email us at Rebel Trading Group with 2 G's, rebeltradinggroup@gmail.com. And I think that's a nice, easy wrap up for that vocab section there. Yay. That was a nice, painless one.
Yes.
Yeah. So another thing I wanted to bring up, Nathan. So this is a very subjective topic. It really depends, dude. And I feel like there's no perfect answer. So I feel like I would bring it to you here on the show. Do you think, is it wise or unwise to invest money while you have debts? Should you be paying off and tackling your student loans and your car debt and your credit card debt? Or is it okay to do that, but instead of really tackle it, you pull some extra cash that you're making and you put it to work for you? Like what do you do? What's the wiser bet? Build the nest egg or pay off the liabilities?
Both.
Well, I mean, of course you want to do both, but like if you got, I mean, how do you do it? Do you just do like a 50-50, pay the minimums, and anything extra you put into retirement? Or do you accelerate paying off your debts? That way, in the future, you can play the markets. Like, that's a really hard one to think of.
Well, you have to think about how much you're making, and if you want to grind it out, I just feel like there's no I don't know. I get bliss with saving, you know?
It feels good. Is that what you're saying?
Yeah, it feels weird. Yeah, it feels like really good to save.
And I'm completely with you on that, because before I was always interested in saving and growing my money, but I never had the discipline to leave it in my account. But once I discovered trading in equities, it made it fun to save. I was like, holy shit, I need to make as much money as I can and put it into this account. So it felt like I was doing the best thing I could possibly be doing, was make as much money as possible and throw it in this account. And it made saving fun. It makes it easier for me to be disciplined, because it's like, okay, do I really want to go and spend $4 on a milkshake right now, or would I rather save that and put it in the market?
You can probably afford the milkshake.
I can afford the milkshake, but I mean, really, do I need that milkshake?
Yeah.
No. Sure. No, that $4 can quadruple in 20 years, bro. But you get what I'm saying.
I got you, yeah.
So, anyway, it's just, unfortunately, a lot of us millennials, I just hate calling us millennials. Ugh. I got a drink after that.
I think you can find room to save. Listen to me. Hear me out. Or were you saying something? I'm sorry.
No, I mean, I was, but
go ahead.
Basically, my point was just saying, like, millennials, like, a lot of us, not all of us, of course, but a lot of us as a general population struggle with debts and low income and high student loan debt, especially. So I feel like it's kind of hard to like really just dig out of that rut in addition to putting money away. So like if someone's like, oh, I don't put money away, I'm just paying off debts. Like, is it dumb or is it smart?
There's times like I feel like you should be saving, and you can turn your retirement like payments off for a couple weeks. Like I know it's possible to do that.
Yeah.
And if you don't know how, go to HR. I guess is that who you go to? I don't know.
It depends on your company. I mean, usually you just call up human resources or you check your 401k account. Call them.
But for me, for like investing by myself, considering myself in Robinhood, my own savings account, I guess. If I know I'm going to be like broke one week because of bills or something like that, or like I'm paying off like student loans or something, then I won't put money in.
Yeah, when you got a bunch of bills that, yeah. I have like some months that are more expensive than other months.
Next paycheck, maybe I'll put that like a little bit higher on the priority list.
But do you think that's more important than like just tackling, like, I don't know your financial your personal financial situation, honestly, I don't want to know it, but I was just going to say, if you had a higher amount of debt, like that was kind of pulling you back, like you had higher payments and stuff, just imagine like you have a little bit more. Would you still allocate that money to the markets?
I try to.
Or would you pay off like your 17% credit card and your 9% student loan?
I try to. You know what? I would really honestly try and find a job that matched 401k if I was gonna do something like that. That like
let them do your investing.
Yeah. No. I mean, just put it in an account and like work for them for a while, and then maybe roll it over into another IRA and slowly do that. Maybe put like a small percent in. I just feel like if like you can put in 1% a week, like that's not bad for a while. For like if you do that for like a month or two.
1% of your paycheck?
A week, yeah.
Yeah. So like 4% a month.
Sure.
That's really not a lot for most people. Most people can find wiggle room for 4%. Like when people tell me, God, I'm about to go on one of those fucking rants, Nathan.
I told you.
When people tell me like, oh, I can't afford to save money. I can't put away money. I can't save. Like like it turns me off so fast because I'm like, it's bullshit.
1% a month.
Complete bullshit.
Try that.
Like if you can't put $10 away, every week, you've got bigger issues. Like you've got serious issues. You're better off just waiting for bankruptcy court. Let it all fix out there. But that's besides the point.
Yeah.
So, yeah, I was just kind of curious about that because it's something I have. I do have a lot of student loan debt, unfortunately, but I had fun. I got to live the college life.
Well, then how do you do it? How do you do it?
Unfortunately, I don't floor it on my debts. I have not made. I haven't given the bank any more money than I need to every month. So as a result of that, I've been pouring that kind of leftover money back into Robinhood and now the GDAX. Woot woot. But I feel guilty almost every time because it's like, wow, should I just fucking tackle these loans and just get rid of these $700 payment student loans for the next 7 years? Or should I keep trying to build up that trading account and work closer to my day trading goal?
Yeah, what if you like made it big as a day trader, then you could just pay it off right away? You could pay it off in a trade.
Would you do that?
Yeah.
If you had $25,000 in debt and you built your Robinhood account to $25,000, would you just pay off your debt and just start with a clean slate all across the board?
Yes.
You would?
Yeah. I think I could get
so what you're saying is if I have $50K in student loans and once I hit that median, my student loans come down to 36 and my account hits 36, boom.
Yeah, there you go.
Liquidate my position and zero out.
I mean, you'll have to pay taxes on it, so.
Yeah, that's true. I do like that idea, though. I do like that idea because it gives you exposure to. And another thing that I think of, and I know it's almost wrong. A lot of people, oh yeah, it's so reckless. It's just so reckless. But I also view my accounts as savings.
Yeah.
I know that's wrong. A lot of people say don't put money in the market unless you're going to touch it unless you're not going to touch it for 5 years. I'm like, no, it's okay. If I put a little extra money away, I know that I might lose it. But if I want to use it, that's why I have it in an account, in a margin account, and not an IRA. Because if I want access to it, there it is. Voila. I can use that. I can liquidate it and pay off those debts and make some extra bill payments if I really wanted to. Same with the cryptocurrency. So when you put that money away or you deposit that account, that money is not gone. That's the beauty of this. A lot of people think like when you put that money away, it's like, gone. Oh, it's gone. I don't have it anymore. It's like, no. Here. If you need it that bad, like if, God forbid, you need it, fucking take it. It's your money. Sell and do what you got to do. I've done it. I did it last month. Took a much larger portion than I wanted to, but
how liquid are mutual funds?
They are pretty liquid. The only problem is that they only sell at the end of the day, like during non-trading hours.
Yeah.
That's the only problem. And personally, that's okay. Because, the mutual funds aren't meant for the trader, for someone who's going to open their laptop. Like most people who have mutual funds are at work 9:30 to 4.
Yeah.
So I guess that's okay. And that also is a way to protect the mutual fund from rapid price fluctuations and all that stuff. So they are pretty liquid. I don't know, personally, I don't know how long it takes for you to get your money after that. Because I know if I sell SPY or any other stock in the world,
money right there.
I get that money. You get that money right there, and then of course they hold it for 3 days. That's such bullshit. How that holding fee or that holding period. That with today's technology, that does not need to happen. They do that just because they can. Just because they can. They say
isn't it anti-laundering?
It isn't. It is also that, but like, come on, dude. Like, really? They just want to be able to hold your money for an extra 3 days.
Maybe. I don't know.
I might even throw a link to it. There's a video from one of the podcasts that I listen to called Power Trading Radio. And the guy did a webinar about how order flow actually happens. And apparently the way that Robinhood works is that they sell these orders that we have to other brokerage firms or to these clearing houses or to the market makers. So they sell our order for literally like hundredths to tenths of a penny. Like it's so small. And then these people bid, and if they have your order and they execute the trades, then they can profit off of the spread between the trades.
What?
It's like this complete complex thing. I'm actually gonna put a link in the show notes for this. But it was actually very good, and the reason that he put that up was because he was talking about order flow and how market makers work, and why Robinhood is actually worse to use than another commission broker that offers level 2 access, because when they sell these orders, they can choose out of the order book which order they want to execute. Because if there's 5 or 10 different bids within the order book, that clearinghouse that took the order from the broker, Robinhood, they can choose which order to execute. So if there's 4 different bids, they can choose the lowest if it's the sell, or if it's the highest if it's the buy. Absolutely.
What if you have a limit? Like, I mean, your limit's your price.
Yeah, if you can do limits, yeah, absolutely. But for more trading and market and faster movements. But with level 2 trading, you can actually go in, skip the whole clearinghouse thing, and look directly at the order book and buy in at those areas. And because Robinhood does not offer level 2 trading, that is the disadvantage, because you cannot see the order book. So if you bypass Robinhood and go straight directly to the order flow and hit the bids and asks based on the order book and the depth chart, then you can get better price execution. And the whole point of this was to show one of the disadvantages of Robinhood's free commissions, or commission-free trading style.
So you can't see the order book. That's the only thing that Robinhood doesn't have in the depth charts.
Yeah, and he was saying that was the primary disadvantage to the trader. That was like the biggest thing against Robinhood.
I don't know if I would ever use an order book. I guess it helps a little bit, but I don't know.
Well, because you'll see. Let's use Ford as an example. You might see 10:01. There's an order to buy 200 shares, and then at $10 even, there's also an order to buy 14,000 shares. But then at $9.99, there's an order to buy 6 shares. So you can go in. You say, okay, well, I'm looking to buy 400 shares, so I can't buy at $9.99 right now. I'm going to have to either go to 10 or 10:01, and 10:01 has 14,000 for sale at that price, so I'm going to get one. Yeah. Or I'm going to get my 400. So that's the whole point of it, is to be able to look at the price and determine based on your position size. That way, when you see the order come up for 10,000 shares, that's 45 cents below $10.
Yeah.
That's why you see the price movement there. So, very interesting concept. It was another thing I don't know how we got to that topic. Something about Robinhood, or I don't know, paying off debt. But how the hell did I get to that?
I don't know, man. It's fun.
I'm gonna have to wait till I listen. But I guess that's a good way to shed some light on one of the disadvantages of Robinhood. We sit here and talk about how great it is all the time. They don't pay us to do that. Fucking trust me. So I guess we can badmouth them a little bit.
It's a criticism.
But
You're allowed to say it.
But if you just use your third party stuff, like I use, I've been using a little FinViz, but I also use my E-Trade. I use Yahoo Finance and a lot of other little side websites that if you ask us, be more than happy to share with you guys. But if you use those and then allocate your prices in Robinhood based on those, you're fine. You're fine. You don't need to. I mean, most big traders would probably prefer it all to be right there for them, clear, cut, and dry. And
I feel like that article was written by someone who pays like $10 commissions.
Well, no, it was actually it was a video.
Whatever.
It was like a 30-minute webinar. It was pretty good. Now, he does go into some of the advantages of Robinhood, but we know what those are. How their gold pricing isn't based on some complex amount of percentage rates based on how much you're using. Like E-Trade, I think, is under 5,000 is 7.9, and under 10,000 and under is 7.4, and then the higher you go, the less for percentage. But with Robinhood Gold, when you want to use margin, it's just a flat fee all across, $6 a month for $1,000, which I like. That's give me $1,000, I make $6 in a minute.
I mean, I would just think of it as like a sunk cost. I wouldn't even think about that $6.
Yeah, I would just you wouldn't even think about it. If you were actively trading and you had money coming in, no. But if you were like setting it and forgetting it with margin, then no. I feel like in order to really profit with the margin, you have to be actively trading. You have to take back the fee and then keep going.
Would you use margin with options? Oh, there's our word of the day.
Options are non-marginable securities.
What? Really?
Yeah, you cannot.
Are you serious?
I'm dead serious.
Dang, I was getting really excited about getting margin soon and then putting it into like some UDAO calls or something.
Oh, Jesus Christ, no. The only thing you can do, you can buy the actual shares on the margin and then sell the call on those.
Oh.
So that is one way you can do it. But when you get into when your account gets huge and you do use one of the big boy brokers other than Robinhood, unless they're going to offer this in a few years, but I think your account goes above $100,000, they allow you to do options 3. Wow, level 3 options trading, which will allow you to sell puts and sell calls and stuff without owning the shares. So basically, it allows you to use credit spreads in order to sell, be on the sell side of the options. Because think about it, if we wanted to sell a 9 put on forward for 1 year right now, we're probably going to collect the money. The only problem is I don't have $900 in cash to move. So with level 3 options, they take that into consideration. So when you sell the put but buy the call, they will allow you to then use the margin. It's not really margin. It's a separate little. Do you get what I'm saying, though?
Yes.
So it's basically a way to be on the sell side with margin, but they will not let you be on the buy side with margin.
Dang.
The only one now you can buy on margin and you can short on margin.
Well, fuck, I'm gonna get margin. Just fucking pump dividend stocks.
There you go, baby.
Get a bunch of forward.
And fucking flip the call. Dude, if you sell a year call at 50 cents above the strike price right now, you will make 14% in 1 year, guaranteed. Just saying. Nice. Just saying. Between the dividends, if the price appreciates to the strike price, and then the premium you collect, it will be 14%. If it does not appreciate to that price, then you'll collect around like the 11% range.
All right. Well, what do you want to wrap this up, or do you want to keep some more topics?
Like that. Well, I think that's a podcast. What do you have anything you're watching this week?
Oh man, I had something. Why don't you go first, and I will look it up.
You always say you telling me to go first.
Reeve. Oh, I just saw his middle name on.
Okay. One thing I am watching. I'm watching Financials, XLF.
Again? XLF? You gonna go with XLF?
I haven't really done it in a while, but anyway, she's coming back.
Like 2 episodes ago or something?
No, I did Berkshire. I did Berkshire 2 in a row. My broke ass. We're not going to talk about that.
My broke ass.
Should be at 200 on Tuesday then. Anyway, that's besides the story. I'm watching it because she's approaching her highs for the past 3 months. She's kind of looking to get right back there. Or I'm sorry, the past 1 month, not the past 3 months. So she's had a nice jolt up since May 29th, kind of up, ticking, and she's sitting at 28.05. I think she's a buy right now, like definitely like for a buy and hold, but as a trade, I'm looking to see if this is actually a short right here.
XLF?
XLF.
God, I tried to buy a call at the money, and it failed.
She is struggling. If you look at the 1 month and 3 month chart, she's struggling to really break out of this range. So I'm wondering if it's a short on XLF. So I am not looking long. I'm not looking positive. I am looking negative.
All right. I am, as with watching stock, I'm going to be talking about QQQ, the NASDAQ. Just watching,
NASDAQ.
Yeah, the technology. I'm just watching technology for a bit.
Okay.
I don't know if I feel
She did have a little sell-off today.
Yeah, no, could a technology be like a fad? Do you think technology is a fad?
I don't think it is. I think there's definitely a lot of hype. But at the end of the day, the right technology companies are the right investment. There's someone out there, I talked about this at work today, there's somebody out there that's held Microsoft since 1984.
Probably Bill Gates.
So, like, there's companies out there, you got to pick and choose them. I like QQQ because it's a basket of the big ones. The small caps, maybe not so much, but the large caps, if you pick and choose the right ones, those valuations, those will be supported by the fundamentals of the company and by the earnings. Like, look at Microsoft. Yeah. Even Netflix was growing its subscribers by the millions every quarter. Apple has very, very strong earnings, very strong growth, very strong cash flow.
You know what? I'll change mine to XLK.
XLK, so we're going more specific.
Oh yeah, if you want an ETF,
technology,
I'll do an ETF.
Technology sectors. Okay,
yeah, baby.
And you know what? Those are both both the same fund family. XL. So you're XLK, I'm XLF. You're looking long, I'm looking short.
Yeah. All right. Well,
I like it. That's fun.
You wanna? Are we casting tomorrow? What's the deal?
I might be able to cast. It'd have to be a little earlier. Okay, I can text you times, but yeah.
Then if we don't see it tomorrow, then is it Monday yet?